Good morning and welcome to the Killik & Co market update. Stock markets have been volatile in recent days as weak Chinese data and speculation surrounding the future path of interest rates have dominated the market narrative during a quiet week for US earnings. UK property prices have continued to fall, and yesterday the closely monitored Halifax House Price Index data was released. It showed that house prices declined for the fifth consecutive month, falling by 1.9% in August and nearly 5% over the past year, as you can see in this chart. There's been a considerable slowdown in the UK property market, with transactions and mortgage approval rates falling. The shares of property service companies have performed poorly recently. Whilst the recent data represents the steepest fall since 2009, this does follow the meteoric rise of nearly 20% during the pandemic period. There has been notable weakness in central London, and this morning, the London-centric house builder Berkeley Homes issued a trading update. The company has maintained its profit guidance, but the company did strike a cautious tone as private sales reservations have fallen materially. The company's shares have been choppy over the past year, as you can see in this chart. Weak Chinese data and concerns surrounding the nation's ailing property sector have negatively impacted market sentiment this week. Economists had forecast a strong rebound in the Chinese economy after the nation abruptly removed restrictions at the end of last year. However, the post-COVID rebound appears to have run out of steam, and confidence in the government's management of the economy is low. Recent data for international trade, manufacturing, and consumer spending have all been very weak. Furthermore, the headline inflation index has shown that prices for goods and services are falling for the first time in 2 years. This is concerning because falling prices could lead to consumers delaying spending in an already weakening economy. The precarious state of China's highly indebted property sector has been a major focus for investors. As you can see in this chart, the shares of Chinese property companies have performed poorly in recent years. The property and construction sectors together account for an outsized proportion of overall economic output relative to other nations. The sector's activity accounts for more than half of new home sales on a global basis, so it's clear to see why the sector is an important consideration for global investors. China has responded to the weakness by reducing interest rates and also cutting the down payments required for home buyers. While these measures may provide some respite in the short term, looking out to the decades ahead, the sustainability of an outsized property sector is questionable, given that China's population has already started falling and is projected to shrink significantly this century. Over in the US, the economy continues to perform well. Employment data released over the past week has been resilient, although it does appear that the labour market is cooling slightly, and traders are now speculating that the US Central Bank will keep rates on hold at the committee meeting later this month, and they will be due to start cutting rates next year. The economy has performed much better than anticipated, as many economists predicted that the high interest rate environment would lead to an economic downturn. But the consensus view has since shifted, and recessionary risks appear to have receded. The notable feature of the US economy has been the resilience in household expenditure, and this was helped by the fact that the consumer was in strong financial health when the Fed started hiking rates. This could be traced to the unprecedented increase in savings during the pandemic. This chart shows the level of savings as a percentage of disposable income. As you can see, the level of savings increased rapidly, and this allowed consumers to continue spending as the cost of living increased. But the level has now returned to longer-term average levels. Moving to the earnings calendar, it's another quiet week ahead. ABF, the owner of Primark, will report, as well as the US software company Adobe. That's all from us this week. If you have any questions or feedback on today's update, please do get in touch with us by emailing info@killik.com. Have a great weekend and we'll see you soon.